Well, a very good Friday morning, traders. This is a curious combo here on the channel, day trading a DAX, and this is my market analysis. Today is Friday, March 21st, and we are at the end of very volatile week. We're looking at the daily time frame on the DAX, whereas S&P 500 is trying to snap out of its losing streak for the week. I wanted to open the view for us here on the daily time frame. As you can see, the very tiny double top over there that's now broken downwards is our double top and the bottom of the range, like we spoke yesterday. If you're new to the channel, we day trade my double stochastic strategy using two overlaid stochastic indicators with these values shown on the screen. The fast one is moving with values 23.3 and the slow one is with 66 look back period and 3 and 3 smoothing. We don't trade this daily time frame as anything can happen intraday, whether you're leverage or not, but there are a high chances that it will go against you if you will take a position and leave it swinging within the day, and comes a time when you decide to exit your position and it has gone totally to the opposite direction, where your technicals and even the macroeconomic news have guided you and us to do. This is our daily time frame where we take the overall look and situational awareness. We're now, the top of the range is, we drill down to hourly time frame, we can see it better here. The top of the range is 23,495, the all-time highs, and it's been valid since, yeah, this is early March, for a good 2 weeks now. This is what the double top looks on an hourly time frame, and as spoken yesterday, I was talking to you about this range, that we're now in the ranging conditions and ranging markets, and sure enough, it didn't hold up there. This was the start of yesterday, and we're very much in the situation where people buy the rumors and sell the news, and this is exactly what happened yesterday. Swiss bank first announced out of Bank of England and the Swedish Riksbank. Swiss bank was the first to announce a 0.25% rate cut, and the market plummeted already right after that. S&P 500 was able to cover, so wherever it started in its point perspective, it did the same move, but it covered, and now it's hovering around the same as yesterday's open. DAX didn't follow suit because there's a lot of macroeconomic conditions lingering for the weekend. The Russian-Ukraine peace negotiations, or the ceasefire negotiations, are continuing in Saudi Arabia tomorrow, and the US-Ukraine mineral deal is on the table. Still, we've been talking about this for 2 weeks now. The markets are very volatile, very unpredictable. Even an hourly time frame is too much for us. We look to the 15-minute, we look to the 5 minutes, and this is where we take our positions, or this is where we sit on our hands. So you have to remember that patience is a position too. Yesterday, this didn't work well for longs at the almost on the third to the top of the range up here at 23,291 points. We went down all the way to 22,810 and broke the support from early March. It was a bit of a fail breakthrough, and now we're hovering on the bottom of the range. See what's going to happen. But this is how we use the double stochastics. And what I want to tell you is that when the overall market sentiment is being recorded with the slow moving stochastic, where it's nowhere near where you want to take a position, it's in the middle of the range and about 50% timeline right here, and so it's very confused. It's not clearly down, it's not clearly up, it's not grouped together. There's a divergence between them two, and anything can happen within these time frames, 15 and 5 minutes. What was clear yesterday after the open was they were grouped together and they were pushed down with the volatile movement down for many hours all the way to early afternoon. Whether the buyer stepped in here or people were starting to let go of their short positions, I'm sure the seller stepped in the mid-range here to keep pushing the prices even lower. This is not a place where you want to be longing. Pretty much you don't want to be doing anything here. For whatever it's good in this is that we found the bottom of the range. At least it's confirmed many times over. Cannot even count this. There must be 5 or 6 touch points on the bottom of the range, and it's highly oversold now on the 5-minute levels. 15-minute, as we just looked, it's confused, pointing a bit downwards. So I wouldn't be surprised if we would find the next range around and support around the 22,700 points. So this might be our next range and leg down if this support is being broken. I want to show you something also. And since January, this has been valid all the way down to this yellow line here. This is where we were in January, 21,521. There's a lot of room here, I do understand that, but just so that you understand that where we are currently, let's move back to 1 hour time frame so you can see. This is January. This is about around the US presidential elections when Trump started holding his speech, and there was a positive momentum in the markets. Then came the tariffs, and they were introduced to the markets, and then started the big confusion. DAX has been trying to recover, but a lot of this positive movement, even though amidst the tariff talks and these US involvement in European sovereignty, has to do with defense stocks. So the defense stocks has been pulling DAX up 3 times now. Uncertainty looms over the region. But so January points, basis points are 21,554, and if we would correct all the way there within the first half of the year, there could be some serious money lost on the markets, and then you have to understand which side do you want to be on. The shorts are so shortly lived on the markets. I would not be wanting to short the markets. We are still up highly from October. This is around end of November, start of December. But there are a lot of room for this confusion for the markets to correct. But I highly recommend that you look at those dips as a buying opportunity when when the smoke clears out. So don't be rushing into bad positions and leaving yourself trying to cost averaging down the market move. So now that you're here and you've been with me for these few minutes all the way at the end of the video, I would highly appreciate if you hit the like button right next to the subscribe button, and even if you could leave a comment how you find this strategy. Have you tested it out for yourself, and what markets are you involved with? I would be happy to know about your findings, and if you find this helpful. I wish you all happy Friday and happy weekend. I'll see you on Monday.